Hey, traders. All right. So we are broadcasting I'm on Insta, so I'm going to give this a whirl. I'm on Insta right now, the Insta group, and we're at the Simple Trading YouTube channel. So giving that a whirl here today for our weekly breakdown of what's going on in the market. I'm going to figure out the Insta thing when it's sideways. Um, versus vertical, but we'll sort that out in the future. Great to see everybody. Happy Sunday. And let's get here we go. Our video all set. All right, great, gang. Gang's all here. So for the next half hour, we're going to take questions. We're going to also take a look at what's going on in the markets. Now, my folks on Insta, I'll describe what I'm looking at. If you have questions, I think I can read what's going on there. So if you have any questions, let me know. And YouTube gang, well, you know how all this works. So let's get to it. That 30 minutes does tend to fly by really quickly. All right. So let's take a look at, well, we are just now getting the open, right? So for those of you who don't know, why 6 p.m. on Sunday, Rog? Well, the reason for that is this is when I personally start to get ready for the trading day. This is when I start to think about, what it is that I need to do as a trader to be ready for Monday. Monday is going to be a unique trading day because if you haven't looked at the economic calendar already, and a great calendar to keep an eye on is the calendar over at forexfactory.com. It's spelled just as it sounds, Forex factory.com. And tomorrow is an unusual holiday. Bonds are closed. Banks are closed. I don't know if we're going to get any mail or not. And then, which I don't think we are. But yet the stock market is open and the futures market will be trading. So it's an unusual bank holiday where we're not really closed, but we're sort of closed. That does mean we're going to have less regular volume, less market turnover, less participation. Canada's closed as well, so a little bit less activity in North America, which means when we look at that sort of baton passing from the European and UK markets as they wind down at around 11 Eastern and noon Eastern, once we get to noon, the drop-off could be felt a little bit more significantly. The midday doldrums could be a little bit more intense. Okay, so that's what we have going on as we go into Monday. So keep that in mind, gang. Always, for me, whether it's on a Sunday and I look at the entire week, which I really do recommend, and when you're scrolling down forexfactory.com, do this on a Sunday or really early on a Monday. And what you'll see is all the things that you can prepare for. We can all prepare for if we're aware that Monday is going to be a little unusual in terms of turnover. But we do have FOMC speak sprinkled throughout the week. Then you get into Wednesday. What's going to happen on Wednesday? PPI. That information is going to be a market mover. That data release, that hot zone. Then we get into the ECB. Remember, gang, anytime the European Central Bank, the ECB, in this case, it's the Grand Poobah, gang. It's Lagarde, right? So Lagarde is for the ECB, what Powell is to the FOMC. We have IMF meetings. So that's going to be another market mover. And then more so than any of that, 2 p.m. on Wednesday, the 12th, we have our FOMC meeting minutes. Those minutes are akin to being sort of a fly on the wall for the most recent meeting, the statement, and sort of the conversation that was happening behind closed doors. Now, I think these are very well coiffed minutes. I mean, the minutes are going to let us know exactly what the Federal Reserve wants to clarify, but it's worth remembering it's a hot zone. We go into CPI on Thursday. Now, if you ask me, and since you're here, I might as well give my opinion, CPI will be in many ways, especially based on the timing. Wednesday, we get the FOMC meeting minutes. Thursday, 8:30 a.m., we're going to get CPI. Now, my Sector Secrets Mastery folks, last week, we took a look at the non-farm. And I did a little bit of a weird thing. So you might say, Ron, yeah, why did we get together for non-farm? It was my effort to show you all why I don't want you to trade it. So that particular session was really designed to sort of convince you all, Ron, you're right. I really don't want to trade non-farm payroll going forward. But what about CPI? What about initial claims? What about those kinds of hot zones? I'm actually fine with those because they're not necessarily as intense, although CPI could be very intense based on what that inflation reading is. Remember, three pillars of macroeconomics: CPI, PCE are both those indicators for where inflation is. Of course, the Federal Reserve is going to respond to that. Let's go take a look at the chart, because you might ask, well, Rob, what happened the last time we had inflation data? What was the response? And some of you might remember, we had the Jackson Hole sell-off, right? This is the S&P on the daily time frame. We had the Jackson Hole sell-off on the 26th, where Powell really affirmed his much more hawkish opinion of what they're going to do with monetary policy. This candle right there, September 13, that was CPI, my friends, and we're going to be getting that this Thursday. Could we have something dramatic like that? If that CPI ticks up again, we sure could. So that's going to be a massive event for us to keep an eye on. And it could be traded. If you trade futures or even Forex, 8:30 a.m. Eastern could be a very interesting hot zone to keep an eye on. So that is what we have going on. As always, Mr. Walker, thank you. Thank you for smashing that like button. Let me take a look at Insta here. All right, got quite a few folks there. If you have any questions, feel free to, hey, yep, thanks for the wave. If you have any questions, I'll keep an eye on that as well. Hey, Insta folks, I am completely Insta inexperienced, so I appreciate you all being really patient with me. So basically, if you turn your phone sideways, is it a decent picture, I guess? And really, I can even probably flip the camera around and show you the charts from time to time, which might look really cool too. So maybe we'll give that a whirl as well. All right. So my folks on YouTube, I see some questions coming up. And Risky Business said, I'm first. You sure are. All right. So let's take a look at, let's see, Credit Suisse. So PP Family has a question. Lots of talk about Credit Suisse's alarming situation. Are we again looking at big US and global banks falling again? Do I know how bad the situation is? I don't, and I don't see it playing out right now in price. So PP Family, remember, if we hear news, remember that if we're hearing it, we meaning you and I include myself in this. If we're hearing the news, it's probably already known to size. I'm not going to say smart money, maybe big money. It's known to size. If this was something really that big money wanted to sell the first opportunity they had, whether that be sell or buy franc, whether that be sell or buy euro, whether that be sell or buy dollar, we'd see it now. Whether that's sell or buy the S&P, we'd probably see that now. So there's always news out there on the horizon. To your point, you're absolutely correct. However, whatever it is that I will measure as being impactful has to be playing out in price. And that's the way that I'll look at it. So how bad or good it is, the situation, no one's calling me, my friend. I'm not on that email chain. However, we can look at price, and that's going to be the true indicator of it. That's been my experience. All right. Do I know which one is better? All right. Next question. Options on the S&P versus options on the SPX. All right. Versus SPY options. Okay. A very cool question. So for those of you that are unaware of what's the difference, Rog, S&P futures options are, well, options on the ES micro futures contract. Then we have the options on the SPX. Well, so futures options and SPX options, probably the better comparison is SPX versus SPY, because SPX is a European style option, which means they can only be exercised on the day that they expire, which is why we have that wild volatility and sort of hyper theta decay reaction. While SPY and ES futures options they can be exercised from any time they're bought to the day of expiration. So that's what's called a US style or American style option. So the biggest difference is the way in which they can be exercised, right? And that's the biggest difference. Now, I wouldn't say one is better than another. I would be very aware of costs. Sometimes ES futures options can still be quite spendy, maybe not as expensive as the initial margin requirement to trade an S&P futures contract, either intraday or overnight, compared to the day trading margin of that same futures contract. That can be very inexpensive. Options on the SPX are very volatile. Again, that European style expiration, and they can be spendy. They can be quite spendy, but I do believe they get that 60-40 tax treatment like the futures do, which is far preferable for traders like us, right? And then the SPY, if better is defined by affordable, and if better is defined by lower risk, all right? If better is defined by that, then I'd say the SPY options are quote unquote better. So we have to know what's better or not, right? So that's the way that I would look at the way in which we look at ES options versus SPX options versus SPY. I don't know if there's any better or not, all right? So last question. Is which are leading indicators, which are lagging technical indicators on a technical chart? So you're asking leading versus lagging? PP, I have a very probably unusual take, arguably controversial, but I'll even go out to say it's the only true take there is. And here's why. If an indicator needs price, it can't lead price. I know it becomes a chicken or the egg conversation, but I do not believe in leading indicators. It's just my opinion. Now, leading indicators, the suggestion is, what's insinuated is some secret squiggle traveling and wiggling across our screen on our chart somehow knows where price is going to go. And when we say that a leading indicator leads price, it can project price. It can project levels where prices could go. The leading indicator is just a really clever way of saying, I've got a crystal ball. I think you all know where my opinion is on that. They don't exist. And that's all that needs to be said about it. There's no such thing. And people can argue that, but if it needs price, how can it lead price? And let's just call it what it is. A leading indicator is somehow insinuating that an indicator knows where price is going to go. And I've just never believed that throughout my career, and I've been no worse to wear for it. So thank you for the questions. Hey there, I am Groot. If we have a bearish clearing range breach, all right, technobabble alert. That's one of my technobabble for the first 30 minutes of the morning is most often known as the clearing or opening range. If we break that range, it's known as a breach. That's what I call it, like a whale breaching the surface. If we have a neutral trend, is it valid to buy the S&P call? So we have a bearish breach, but you're asking if we can buy the calls if we have support from another indicator. If the trend is neutral, and that's a great differentiator for my day traders out there. However it is you're determining what the trend is after the bell is going to be the most important thing probably you can do. If the market is trending up, I cannot short. If the market is trending down, I am Groot, I cannot short. I mean, that's just a big cup of nope, right? However, if it's neutral, and even though I breached, breaking that range that's established during the first 30 minutes of the morning does not negate my being able to buy if the breach was quote unquote bearish or short if that breach was bullish. So no, it's not sort of the way in which if we have a trend, it negates. Okay. So I see a lot of folks joining on Insta. Good to see you all. Absolutely. Absolutely. Thanks for the waves. I love it. I'm looking to see, Adam, I'm testing out this whole, I'm looking at the disaster that is Sunday Hair right now. It's a good thing I'm just not vain. I know a lot of folks spend time, no makeup. I know, shocking, right? It's a good thing I'm not vain. You know what? Y'all are here for the market analysis, right? If I wanted to spend time worrying about high definition television, I'd be on television, right? Although I do feel sad for them because television now, wow. I remember the few times that I have been on, you need to put on a lot more makeup before those merciless cameras get on you. I'm just rocking the iPhone here. All right. Thank you for the question, I am Groot. And I hope that makes sense, right? And the same thing would apply to SPX puts or calls. The same thing would apply to SPY as well. All right. Okay. Cool, cool, cool. Big cup of no. I think you're seeing that. You all are very kind on Insta. All right. Let's see. Yeah, so I am Groot. Can you put on a bullish trade? Long calls, long micro, long mini, long SPX calls, whatever, even in a neutral market. Even if we've broken below the low between 9:30 and 10, the answer is yes. All right, next up is, all right, video and audio is great. I love it. All right, any potential in wheat? Al, thank you for the question on a commodity. I love it. All right, thank you for a question on the commodity. So if I'm going to look, so the question is about WEAT. Now, if I'm gonna look at WEAT, I have to go back to the main market, and the main market for WEAT is the ZW futures for wheat. Before WEAT is even valid, I need to get an idea of structure. Structure determines strategy. And then, so when we look at this, I'll tell you what, in Insta group, I'm looking at corn and I'm looking at wheat. I'm looking at corn and wheat. Al, I'd probably favor corn a little bit more. So if you're looking at the screen, and then for those of you that are playing along at home, yeah, I would say let's look at corn over wheat. So if you're on, say, Thinkorswim, to pull up, let's, by the way, if you've never pulled up wheat futures before and you're on Thinkorswim, the symbol is /ZW. If you want to look up the WEAT ETF, which is an alternative of wheat, if you want to go that route, it's WEAT, and it's a fairly liquid option chain. If you want to pull up corn, it's /ZC, and then CORN is the ETF alternative. Now, anyone who's on TradingView, and you know, a lot of you know, I'm a huge fan of the TradingView platform. If you want to pull up corn futures on TradingView, it's ZC, the #1 exclamation point, and that gives you a continuous contract. And if you want to pull up wheat, continuous wheat on TradingView, ZW, the #1 exclamation point. So any futures contract that you want the continuation contract of on TOS, just put a / and the symbol. And on TradingView, it's the symbol followed by the #1 exclamation point. Super, super easy. All right. Thank you for the question. I can't say I love either a lot. Gosh, you know, I would love to get into some futures trends, to be quite frank. I probably like corn a little bit more. Al, one thing we do have to check, and I haven't, and I don't think I have it up right now as I'm doing my Sunday homework, and that is when is the next USDA crop report? Because that's akin to the volatility of a central bank event for grains, right? It's like earnings for stock. That's the kind of impact that USDA crop report can have. All right. If inflation is down, oh, okay. So Ramsey, cool question. Let's get on back over to Forex Factory and take a look at our 8:30 a.m. Thursday the 13th CPI number. Right now, and this number could change. That forecast, that consensus number of 0.2 could change. And it does reflect one more tenth of a point tick higher than the previous. So if you're wondering, Are we factoring in, are we discounting a slightly higher CPI? Yes, right? So now and that's a month over month, by the way, CPI. If we tick higher, what does that do to equities? I think the question is, what are stonks going to do if we have a higher CPI? They're going to go down. They're going to sell off, because what's going to happen is at that point, we are very likely going to see the 5% target rate, meaning the Federal Reserve is likely to take the interest rates, their interest rates, right? Their Federal Reserve, they're hiking their interest rates, the Fed fund target rate or Fed target rate to 5%. We're going to see that column probably take a whole lot more a prominent role for probably March of next year. So right now we're sitting at about 4.75, 4.5 to 4.75, 4.75 to 5%. We could start seeing that 5% in play, and that would definitely send equities lower. Okay, so that's definitely something to keep in mind. Hey there, to that pipeline. Am I having a class at the end of the month, and what will I be covering? So one of the things we've been talking a lot about is volume. Oh, we've been talking a lot about volume the last 3-4 weeks, and that's because we've come out of summer. We're not in the doldrums of summer anymore. We can discuss the impact of volume, this surge of volume we get for the fall trading season, and whether that's volume via an anchored VWAP, whether that's volume via our volume profile, or via my V score, which is the standard deviation of the volume weighted average price. Yeah, absolutely. We're going to talk about volume, and we've already started that conversation, right? So I have a webinar on October 26th. So it's actually my anniversary. I think it's my 26th anniversary on October 26th. So I'll be spending that with you all. I don't know if my husband will be hanging out or not, but I'll be with you all for my 26th anniversary. And we're going to be talking about volume and size. And even more importantly, we're going to be talking about how volume is the reason that I recommended traders take advantage of a trade in July, which we know what happened, about a 700-point rally in the S&P. And I'm going to talk about how volume helped me rebuild my portfolio in 2008. Well, actually rebuild from 2008. I actually started rebuilding in 2009. And I'm going to talk about volume also from the perspective of 2019 and 2020. The cool thing about volume, gang, is it really can't be curve fit. We're not talking about indicators settings can be changed, and it could look very different depending on that. We're looking at size. And my theory, my hypothesis on the importance of volume for all of us, intraday, daily time frame, weekly time frame, is that before there is any shift in sentiment, before there's any shift in momentum and ultimately trend, volume will have started that process. And I started looking back on dozens and dozens of weekly time frames and hundreds of in the daily time frame trades, and quite literally hundreds of my intraday trades, and there was a specific pattern that formed. It was a volume pattern, it was a price pattern combined with a trend environment. It had to be a specific trend. But oh my gosh, when you put those three in order and you find the volume and the pattern and the underlying market trend that suggests the waters are safe to wade back in, it works an alarming number of, it's that simple. But everything really started with volume. So then I started asking myself, let's go back and look at some trades where I lost. And I saw my pattern, or I saw my environment, or I saw my indicator. But the times that I omitted volume, the win rate dropped. And that was a real eye-opener, because even after 33 years, there are things that sometimes we just forget to check. We figure, well, we've got that covered, right? And then when I started digging back and looking at the process and the order of the process, the light bulb went off. So that's going to be what I'm going to be talking about on the 26th. The class is on the 5th. All right. So thank you for the question. All right. Questions. I got a couple stocks here. All right. Mr. Walker's asking about Qualcomm. Sure. Do I like the structure here? That's a downtrend. So you're looking for puts on Qualcomm, short the rip. I have no problem with that. Mr. Walker, you just had an opportunity on Thursday with a minor high for that opportunity. Intel, I'd say I want to short the rip, but we really haven't had an opportunity. So there's on one hand, knowing what we want to do. The strategy is clear. On the other hand is, do we have the opportunity to enter the market? And those are two very different things. I think a lot of times traders think, well, if I know I want to be short, let's just get short now. Gang, that's one part of two, which is what's the direction of the market and what therefore would the strategy be? And then from strategy, we need setup. And from setup, well, then we need confirmation and price and everything else. So it's three distinct things we need. Do I know what I want to do based on the structure of the market? Do I have a setup that allows me to get in with a specific price range, a stop loss, and a target? And finally, does price enter the range that I need? And that's always how trades work, right? That's always how trades work. Structure, setup, and then that price triggers, right? And that price triggers. So I hope that makes sense. And so Intel, no. XLF, again, do I know what I want to do? Yes. Am I at right now a place where I can do anything about it? No, that was actually, Mr. Walker, that was probably the fifth, right? That's how specific we need to be. The difference between, say, investors and traders, and it really shouldn't be this, but the difference between investors and traders is usually timing. If someone were to ask me, well, what do they do differently? Traders rely on timing, a very specific zone, and then prices coming back into that zone. Investors can actually benefit from timing too. If we think that Warren Buffett doesn't know what his cost basis is for his longer term investments, that he just buys and holds for 50 years, that would be wrong, right? I think a lot of us know that even when we're investing, we should have a pretty good idea of what our cost ideally should be. So price in that zone and waiting for it like a great, I know we're in the playoffs right now. A great batter at the plate knows the pitcher's going to throw the pitch somewhere. That batter knows their zone. That batter knows their results, their typical results, if they see that pitch over that part of the plate. We are the same way. We have to wait for that pitch to come over the plate in our zone. And as Grandpa Buffett says, us traders, us investors, we get to play a no strike called game. They can throw as many strikes against us they want, right? We're not going to ever get called out. We only have to swing at our pitch. And that's probably the most difficult thing for traders to do. Know their pitch and just wait for it, right? And just wait for it. So I hope that makes sense. And thank you for the question. All right. Next up, is it too late to sell JP Morgan? So Sue, I don't know your cost basis. I don't know where you're in from, but I would say JP Morgan is attempting to form a bottom. I'm not saying it's forming one yet, but it is attempting to form a bottom. It's not a zone that I would short from. I'm not entirely sure it's a zone that I would buy from yet, but it is attempting to short a bottom. So you bought at 160. Sorry, you bought at 160. My apologies. I just saw that just now. So here's what I'll tell you. When you buy at 160, for whatever reason that was, let's think about what trading really is. Trading is, I want to buy at a certain price and then fill in the blank. What's the reason? Why am I buying? Maybe it's a specific indicator doing something. My secret squiggle, that's what I call indicators. My secret squiggle is doing that thing that it needs to do to give me confidence to buy. Perhaps it's the price level that's support. Perhaps it's another indicator that's telling you this should hold. Two things I need to be aware of. What is the point of validity for the trade, right? And that's probably the first reason that I would get out. So the trade is no longer valid. Maybe it's the oversold support that's no longer holding. Maybe it's the quality of the trend that's no longer holding, right? So I don't know what your point of validity was. And if you're saying, Rock, I don't think I had one. I just wanted it to go up. I totally hear you. But what I would say is we definitely need a point of validity. Then which is different than the stop loss. The stop loss then becomes how much am I even allowed to risk on that trade based upon my account size and my risk tolerance. And that's a different calculation. So then we understand our account size, we figure out a percentage risk that's allowable within that account size. And then once we've exceeded that, that's it. We have to tap out, right? And that's one of the things I love about, I love MMA, I love jiu-jitsu. Why do I love those sports? In boxing, which is a great sport too, the sweet science, right? But in boxing, usually someone's knocked out. Someone has to lose consciousness, oftentimes to win the match. However, in jiu-jitsu and MMA, a lot of those fighters are going to have losses. It's okay to take an L. And I think that is so much more applicable to us as traders. It's okay to take an L. The whole point is, though, if you're in an armbar, right? If you're in an armbar and you're thinking, I can tap or I can get my arm broken, you tap. You tap so that you can come back. You tap and you tell your opponent, good match, I'll be healthy and I'll come back the next match. We'll do this again, right? I break my arm, not going to work. So I look at it from the standpoint of what can I come back from? I never want such a debilitating loss in my account that I cannot come back and say, all right, market, you got that round. I'll take the L, but I'll be back because I still have money in my account. I still have a process. I still have my indicators. I still have a risk plan, and I'll be back. And that's the way I look at that. So think about those particular, and I know I have the wrong question on the screen right now. Where is it? There it is, Sue. That's the way I look at those types of decisions. Okay, I hope that makes sense. All right, gang. That's it for our show. We do about 30 minutes. Sorry, I ran over a little bit, but my Insta folks, so cool to see you all. I'll see if we can't do this for Charts and Coffee in the morning. I don't know if this is a little bit too much accoutrement on my desk, but I think we might be able to pull this off. All right, gang. Thank you as always. Thank you as always. I will see you all on tomorrow, 9 a.m. for our Charts and Coffee. I mean, I have coffee I'm rocking today too, so I'll see you tomorrow morning for Charts and Coffee, 9 a.m. at the Simpler Trading YouTube channel. And Insta folks, I'll see if I can't do this again if it's something that was helpful, okay? All right, gang. Have a great one. Have a great one. I'll see you tomorrow. Be good to each other. Now let's see. How do I end my Insta? All the fun technical stuff. All right, we'll sort this out.